January 11, 2018, Dubai, United Arab Emirates, was the day everything changed for Sidney Lemos and the world of high-stakes financial crime. On that day, Dubai police formally arrested Sidney Lemos in connection with a massive $200 million Ponzi-style investment scheme that had ensnared thousands of investors in the United Arab Emirates and beyond. The headlines were immediate and explosive, with authorities calling it one of the most extensive financial frauds in recent UAE history. From the moment of his arrest, the story of Sidney Lemos was one of ambition, deception, and the devastating cost of financial trust gone wrong. Sidney Lemos, a 37-year-old from Mapusa in the Indian state of Goa, was taken into custody in Dubai on January 11, 2018, after months of investigation by the Dubai police and regulatory authorities. Dubai's Department of Economic Development had shut down his firm, Exential Group, in July 2016, following a flood of complaints from investors who could no longer get their promised profits paid out. In the days after his arrest, investigators began to piece together how Lemos's company operated, how investors were drawn in, and how the entire operation unraveled. What became clear very quickly was that Exential was not simply a failed business or an unfortunate investment gone bad. Instead, it aligned with what investors and authorities labeled a Ponzi-style scheme designed to ensure early returns by using new funds to pay old investors. As Dubai authorities moved to press charges, hundreds of criminal complaints were registered against Lemos and his close associates, including his senior accounts specialist, Ryan D'Souza. By April 2018, a Dubai court had convicted Lemos and D'Souza in connection with 513 criminal cases tied to the scam, sentencing both men to over 500 years in prison, one of the harshest penalties ever imposed for a financial crime in the UAE. Sidney Lemos grew up in Mapusa, Goa, a coastal town in western India known for its vibrant markets and tight-knit community. From early on, Sidney was described by acquaintances as energetic and ambitious. Football was an early passion for him, and as a young man he played the sport at local levels. His interest in football would later shape parts of his business persona and help elevate his public profile. In the early 2010s, Lemos moved to Dubai, a city of towering skyscrapers and global business promises. There he became involved in the financial services industry, setting up Exential, a company officially described as offering foreign exchange and commodities brokerage services. He also founded or took ownership stakes in other ventures, including FC Bardez, a football club that competed in the Indian football circuit, and became a sponsor of FC Goa, a franchise in the Indian Super League. These ties with football clubs and media exposure helped him cultivate an image of success and legitimacy. Exential marketed itself to investors around the world, especially to expatriates and professionals in the Gulf region. Investors were drawn by promises of rapid and high returns. The sales pitch was simple: invest $25,000 and get 120% back annually. For people looking to grow savings or plan for the future, those figures were remarkably attractive, and many were persuaded by the confident presentations and social proof that surrounds successful-looking businesses. In the beginning, Exential did make some payments to investors, creating a sense of credibility and encouraging some people to reinvest and bring in friends or family members. That pattern, common in Ponzi schemes, serves to build trust before the collapse occurs. As the operation expanded, colleagues and friends of investors also became drawn in. Some worked directly for the company in Dubai, earning good salaries compared with typical entry-level positions at the time. Offices were filled with well-paid young staff in suits, though, according to former employees, real substantive work was minimal, and the company's leader maintained a closed-door policy. Behind the scenes, money flowed in and out without being invested meaningfully in foreign exchange markets. Instead, funds from new investors funded payouts to existing ones, personal luxuries for Lemos, and efforts to sustain the appearance of wealth and success. Lavish parties, frequent overseas trips, and expensive cars became part of the public image associated with the company leadership. By March 2016, patterns of delayed payments and unfulfilled promises began to surface. Investors who were used to early payouts suddenly saw returns slow or stop. Communications from the company grew vague as tensions rose and concerns spread among account holders. These warning signs coincided with authorities taking a closer look at the firm. In July 2016, the Department of Economic Development in Dubai sealed the company's offices after mounting investor complaints and regulatory scrutiny. This closure confirmed fears held by many that Exential was not operating as advertised. Around that time, a series of lawsuits and legal actions began to unfold. Thousands of investors, many of them expatriate professionals from sectors like aviation and oil and gas, found themselves facing the harsh reality that their money might never be returned. Some had invested life savings, others had taken loans to participate, trusting in the high returns that were once paid. In December 2016, Dubai police arrested Sidney Lemos. His detention followed extensive complaints from investors and mounting evidence gathered by financial crime investigators. Another key figure, Ryan D'Souza, an accountant with the firm, was arrested while attempting to leave the UAE. Both men faced criminal charges tied directly to the collapse of the investment operation and the widespread financial losses incurred by clients. As the legal process moved forward, the magnitude of the case became clear. Investors from dozens of countries had been affected. Lawsuits followed, and courts began hearing claims, many of which sought to recover funds or hold the company leadership responsible. Some legal experts warned that even if investors won judgments, recovering money from assets scattered across borders would be difficult. Efforts to trace and reclaim funds took legal teams into jurisdictions as varied as Australia, India, and the British Virgin Islands as part of broader efforts to untangle the financial wreckage. On April 11, 2018, a special bench of the Dubai Misdemeanors Court pronounced its verdict. Sidney Lemos, his wife Valani Lemos, and Ryan D'Souza were found guilty of multiple counts of fraud. The court handed down sentences totaling over 500 years to each defendant, based on the number of individual fraud cases registered against them. While most sentences consisted of 1 year for each case, the cumulative impact symbolized the severity of their crimes and their effect on thousands of individuals. The outcome was met with a mix of reactions. Some saw the sentence as an important warning that financial fraud would be met with serious consequences. Others reflected on the limitations of justice in restoring lost savings or repairing the financial damage done to victims. There were also statements from the Lemos family asserting that the conviction was unfair and that Sidney was running a legitimate business that faced banking issues and misunderstandings. His wife claimed those challenges and not intentional wrongdoing were at the root of the collapse. In the years following the court decision, many investors continued to seek avenues for restitution. Legal firms representing victims reported winning judgments and executing legal strategies to identify assets tied to the scheme, though progress has been slow and complex. Meanwhile, the larger conversation about investment risk, Ponzi schemes, and regulatory oversight gained traction in communities around the world, especially among expatriate professionals who had been deeply affected. The Exential case also became a cautionary tale within financial circles, often cited alongside other global Ponzi schemes and fraud cases. Lawyers and financial advisors emphasized the importance of due diligence when considering investment opportunities, especially those promising unusually high returns with low transparency or unclear business models. For victims and observers, the story of Sidney Lemos is about more than numbers and sentences. It is a story about trust, ambition, and the very real human consequences of financial deception. Thousands of people dreamed of growing their savings and building secure futures for their families. Instead, they confronted financial loss and the painful task of rebuilding. It is a reminder that in the world of finance, too good to be true often is. Thank you for watching and staying with us through this story. What are your thoughts on the Sidney Lemos case and the lessons it raises about trust and investments? Share your perspective in the comments. If you found this report valuable, please like, subscribe, and click the notification bell so you never miss an update.